Centene just suffered its worst day ever. Jim Cramer reveals the real story behind the 40% plunge. Cramer doesn't just explain what happened. He warns about what's coming next for the whole sector.
Your forecast companies make forecasts. They're supposed to try to beat them or not. They rarely pull them. See, Centene explained that it had recently received and analyzed health insurance marketplace data from an independent actuarial firm that covers 22 of the 29 states where the company operates. Centene said the data showed that the overall market growth in all 22 states is lower than they expected, meaning fewer people signed up for plans from the state healthcare exchanges, which is a very negative development. At the same time, those people who did sign up for these Obamacare exchange plans are turning out to be much less healthy than anticipated. And people who are less healthy, of course, end up costing Centene a lot more money. Now, after its preliminary analysis of the data, Centene told us that it now expects a $1.8 billion reduction in its expected risk adjustment revenue transfers from the federal government, and that is a huge hit, people. As a result, management expects a $2.75 hit to earnings per share this year, which is horrifying, given that as of the most recent update in late April, Centene was looking to earn more than $7.25 per share for 2025. So what are we talking? We're talking about a 35 to 40% hit to their numbers. No wonder the stock was eviscerated. Even worse, management said that because this whole assessment was based on data from a firm that only covered 22 of the 29 states where they offer exchange plans, they have to run the numbers for the other 7 states, and they're assuming that those states will be just as bad. In other words, their earnings just took a huge hit, and it looks like there's another hit that could happen. Now, we haven't even seen the full extent of the problems for Centene's healthcare exchange plans. On top of that, Centene mentioned that its Medicaid business has, and I quote, experienced a step-up in medical cost trend, end quote, in certain areas, namely behavioral health, home health, and high-cost drugs, and especially in certain geographies, with New York and Florida called out in particular. Now, as a result, management said their second quarter Medicaid health benefits ratio should be higher than it was in the first quarter. Now, this is something we've seen throughout the managed care space. These insurance providers are having to pay out far more than any of them expected to cover. I mean, their policyholders' healthcare costs, well, let's just say things are way out of whack. So what on earth really happened here? How has the managed care space suddenly collapsed under its own weight, particularly when it used to be steady Eddie? First, there's been some noise recently about the fact that the government wants to crack down on inappropriate or fraudulent enrollments in health care plans sold on these kinds of exchanges, which were established about a decade and a half ago through the Affordable Care Act, Obamacare. Basically, there are some people who aren't eligible for these government-subsidized plans, but they're allegedly lying and applying for them anyway. The Trump administration is intent on rooting out these bad actors. Most of us assumed it wouldn't be a big enough problem to truly impact the healthcare exchanges or the companies that run these plans, like Centene. What last night's announcement from Centene indicates is that there's already some attrition in healthcare exchange enrollment, whether that's in anticipation of this crackdown or for some other reason. And worse, what they're finding out is that the population that's remaining for the Obamacare exchanges is less healthy, meaning they require more healthcare, making them much less lucrative customers for companies like Centene. Basically, the people who are leaving the healthcare exchanges are actually some of the people that insurers want to cover. Healthier people who pay their premiums but don't require much medical care. And what's left now that the more healthy people are no longer enrolling is a less healthy population, which of course is bad news for the insurers. Because Centene is the largest player in the healthcare exchange space, they're getting the hardest hit. Okay? Unfortunately, I think the situation is only going to get worse. In order to account for the new situation, Centene will likely have to raise its premiums, which will lead to fewer people enrolling. The only people who will pay up are maybe the ones who are really sick. It's what one analyst today called, I quote, an insurance spiral. Overnight, 2 different research firms downgraded the stock, with JP Morgan and UBS both taking their ratings from buy to neutral. The UBS analyst wrote, quote, with the unexpected risk adjustment results in marketplace and persistent Medicaid cost trends, the company's near-term earnings have been significantly reduced. While the company will look to reprice its exchange book earnings, it'll be on a smaller membership base, end quote. Oh, boy. What does this mean for the broader industry? Well, certainly nothing good, although Centene is uniquely exposed to the problem, so they have it a lot worse. Given the sell-offs in the other managed care stocks, many investors are clearly not willing to stick around to see just how bad the situation can get, and who can blame them. While the negative trends in Obamacare exchanges are Centene's main problem right now, it's clearly not the only issue. The higher costs for Medicaid plans are also hurting them, and higher costs for health care have been an industry-wide problem for over a year now. By the way, all of these problems are happening in a world that still hasn't factored in the Medicaid cuts in President Trump's big, beautiful budget bill that passed the Senate yesterday. In the Senate's version, they're imposing work requirements on Medicaid recipients, which would dramatically shrink Centene's customer base. While at the same time, the bill restricts fees that are imposed on healthcare providers to help fund Medicaid. This stock's already falling apart, and that piece of legislation hasn't even been signed into law yet. At the end of the day, the news from Centene last night amounted to a very negative development for the company itself, but it's also just the latest in a long line of bad news for the health insurance cohort, a group that's already been having a really tough time. You certainly haven't heard me give a ringing endorsement for any managed care companies on this show in a long time. Just last night, when we covered the horror show that is United Health Group, I said that I might be optimistic for better performances now that the old CEO has been ousted. But I also told you that it would take a while for the new CEO to turn things around. But after what we heard from Centene, I think that assessment is probably way too positive. So here's the bottom line. Given this news from Centene, I think the whole managed care industry is borderline uninvestable right now. And unfortunately, things will get worse for the sector before they get better. So I just can't justify telling you to own these stocks right now, even after they've already come down so dramatically. Very painful story, very. Let's go to Oscar in New York. Oscar.
Hello, this is Oscar, longtime listener and second-time caller, calling from Harlem in New York City. I had owned this stock for decades, but aggressively trimmed my position about 6 months ago when it began a really ugly slide. I'd like to know if you think it's finally time to get back into Danaher, ticker symbol DHR.
Okay, well, let me tell you, we never left it for the charitable trust because I have faith ultimately that this company will come through. Why? I've known it for 30 years. I have felt that it always does things right in the end. I am sticking by that, and I truly believe that Danaher can make a comeback. This is healthcare, a lot of IPOs coming. They have China business. The China business isn't that bad. I am not abandoning Danaher right here. All right. It seems like the entire managed care space is uninvestable right now.